Welcome to the Rose Show podcast. Thank you for joining us today. Today I'm here with Mel Stone of Blackbox, a master options flow and dark pool data analyst. Mel, you're an options trader using money flow as your main indicator. You're an expert in analyzing dark pool trading, options flow, and phantom print, focused on intraday and swing trading. You're a trader's best friend. Thank you so much for joining me here today as we learn from you by going into the mind of Mel, Money Flow Mel, by tracking big money together. So how you doing today, Mel?
I'm great. Thanks for having me on. I appreciate the introduction. It is definitely something I'm very passionate about. Love sharing that with people. I think there's sometimes some misinformation. Love to be able to kind of add some insight and just make sure that if you're trading around options flow and also dark pool activity, you kind of have at least a little more insight than just kind of picking something out of the hat and running with it. Want to make sure you're kind of following the right stuff.
I love that. Thank you so much for your honesty and directness and dispelling any misinformation. Options flow can be very confusing, and that's why I'm so honored to be here today and learn from you. And as you tell us all about phantom prints, option flow, and dark pool. So, Mel, I know you weren't always a trader. So if you could tell us about your background, how did you get started into trading? Did it just click for you? How did it all begin?
I always had an interest in finance. I just didn't really know directionally how to go there. I did work at T. Rowe Price in my early 20s. I lived in Baltimore, and it was so fascinating and interesting to me. I worked as an admin in the corporate finance department. But so there was still, of course, that's what they do. And I was like, oh, this is going to be great. I'll be able to learn all this stuff. And then once I started looking at like Series 6, Series 7, I was like, this is so boring. There's not a chance in hell. As much as I love it, there's just not an interest at this level. And so I only knew a market that was based off of fundamentals, analyzing informational pieces about the company. And I didn't even know that there was this whole tech component, and that came, down the line. So always still had that interest, just didn't really know direction, like how to get there. So of course I try to just pick something I like, put that in with my retirement savings, personal savings, and would just, get lucky sometimes, but there wasn't really anything outside of just, hey, I use this, I like this, and went with that. And that only gets you so far. While it is still a really good stick with what you know is best, if nothing else. And then I did have a little period where I had a small business. I took and ran with it. It was the best feeling ever because I really went out like on a ledge. It ended up failing. It was okay. I still was always still really proud of just being able to like take and let myself have that opportunity to at least put myself out there. And then as life goes, moving on, we moved down here to South Texas. My husband's oil and gas. So I just joined a company, Chesapeake, and worked there for a few years. And it wasn't really anything that was super satisfying. And I can't even remember. I can't remember what ticker it was. Most people do, but I was listening to somebody and got on one of the chats. And of course, I'm like, oh, I'm going to put money in an account. I'm going to rock this. And it was a penny stock. And of course, it was a complete fail. But at that point, I didn't even know you had stuff like StockTwits or Twitter or any of that stuff that was completely just all about financial talk. And so it was just through dabbling through there that I really started to go down that rabbit hole and find out so much more information. And I think it's through that process that you really just like, it's so eye-opening. And I started like most to where once I knew that there was a technical side, it was so intriguing, but it was so overwhelming. I mean, I think at one point there was probably a time I had like 15 indicators between moving averages, an RSI, a MACD, a Bollinger, like volume pro, like everything was on that chart that there was. I couldn't even tell you at that time what every one of them did, and I was trying to trade off of it. And of course, none of that's going to confirm. Some will, but some will tell you like you should be bullish, bearish, and so through just insights and through listening to people and reading and just knowing that some people had a lot more experience, and they would just say it's price and volume. The institutions run this market. It's going to be volume and price action. Focus on that. And I went like, but you guys aren't telling me how to do that. Like you're saying that. And how does one kind of start to even understand that or pick up on that or learn. And so from there, it just kind of went down. Okay, well, if institutions run this market, then there has to be a way that you know what they're doing, and started learning about 13G filings and some of the bigger hedge funds, and that most of these larger blocks could be traded on a dark pool. And in and of itself, that sounds like extremely ominous. And there's, kind of a lot of misinformation out there, but it really is just essentially to be able to have a private exchange for larger market participants to facilitate their orders. And it's in a way to avoid chaos. So it's to help add structure. If you remember that fund Archeos a few years ago that imploded, the moves that you had on some of these tickers, remember that was like Disc A, Discovery, VIAV, you had IQ, you had just all these stocks that just, they were pushing all those orders on the lit market. So every time, like you just had this just millions and millions and millions of shares. Well, when you see that, what you're doing is you're yelling fire in a movie theater. And so everybody's trying to jump in front of those orders, and you just have insanity. Now think about if you were trading Amazon and you just have a regular account and you're in a meeting, like you're not somebody who you like to check in every once in a while and see how your stocks are doing. But if we didn't have that buffer, and what if like somebody came in with like really large sells, on one of your largest holdings, and you had no way to even, it's all happening and just like that quick, you have no way to even react or know. I mean, so that's why that exchange is there. But I digress. So it was through that I really started to discover the impact that options flow also had. That oftentimes, as people have information, they have a friend that has a friend that has a friend at another desk that calls them and lets them know there's about to be a deal pushed through. Like, is it fair? No, it's not. But you can cry about that, or you can also say, well, if they're doing it in options flow and options flow is completely lit, why wouldn't I try to start here and see if I myself, because if the SEC is going to come on anybody's door, it's going to be them, not me. They're the ones that initiated that trade. And so it was not easy. It wasn't an easy start because you got to really know what to look for.
Amazing. You are, I have to say, your passion is just amazing. And I love it. I love your energy. And there's just so much information, like you said, and there's a lot we don't know. And bringing out that great example of Amazon just shows the significance of how important it is to know, to be able to read this flow and to understand and how much of an effect it has on the shareholders. It's almost like you're the Robin Hood. You're bringing the information to all the retail and to all the traders from what the big institutions are actually doing. You're like Prometheus, you bring the knowledge to all of us. And, we're so grateful to have you, Mel. You're a true asset and a woman leader in finance. This is a very difficult reading. I have to say, for me, all this data, you're bombarded with all this information. When I start looking at the flow, I'm like overwhelmed, and there's bandwidth constraint. There's just a certain amount of information, and you need to be able to filter through and find the significance of that and what is noise and what is really relevant. And that's challenging. And there's opaqueness, like you said. Not everything, we may assume we see everything, but we don't. And there's a lot we don't see. So it's like you're putting together puzzle pieces and you're trying to like reconstruct what these big institutions are doing. And I'm just so excited to learn about how you think and how you feel and how you put these different numbers that you see together. So thank you so much for that, Mel. Before we go into the option flow, I want to talk about your profile picture. There's a little girl with a red balloon and she's letting go of the red balloon. Is there a significance to that with this options flow?
Kind of. I ran with it when I had 10 followers when I first started. I guess you just kind of go with it, but it is kind of something that I do love. That's Banksy, the girl with the red balloon, and it's just, to me, it's hope. And it even says it on the picture. It's just like, don't stop believing in yourself. Like if
I
you still
love
want it,
that.
you'll have something to continually chase for. Like, I don't really ever want to catch that balloon, because then that may be like the end game, right? Like I always want to have something that I can learn. And I think this is where this think about, there are some here that do have a degree in finance, and how awesome is it to think that you can completely teach yourself all of this if you had the passion, like if you really had the drive. And that's what everybody's trying to do out there. And I think it's one of the most fulfilling things, just being able to utilize some of the technology, learn from some of the greats. And it's a process. It's not going to happen overnight, but be patient with yourself, because boy, is it just really, really satisfying. So essentially, yeah, I don't ever want to get the balloon. I just want to keep chasing it. So I'm going to keep that and keep it up there.
That's so true in life. You know, we're always learning, and it's like we always have that goal that we never seem to reach. It's like that mastery. We're always working and we're tweaking, we're adapting. And at the bottom, at the end of the day, we're always just learning. And the market is a clear example of that. Every day is a new lesson to be learned. I feel like I'm always learning. And it's like that red balloon that you can never really like touch it. You can never, I always say the market is like the ocean. You know, it's so vast, it's so large, and you can never really truly master it. You know, and it just seems that some things are meant to be. And it seems it was meant to be that Mel Stone will read Option Flow and Dark Pool and Phantom Prince. And so we're so thankful that you do, because you really do decipher a lot for all of us.
I like the analogy, the vast like the ocean, because boy, is it, you know, and it doesn't mean that you have to take on all of it. Just find something within that meets, you know, your style.
And your focus on this niche, which is such a significant and important part of trading. And it's very complex. And the fact that you focus on it and you're so passionate, and you're on Voice, I think it's called, all day. Is that what you call it on Blackbox?
Yes. So I'm a team trader. So pretty much anything that you're seeing me post, or even the stuff that as it's coming through, just I'm discussing it, like why we would be interested in this. This fits the criteria. This is what we're looking for. That's not what you take. You know, people ask, what about this? Because they see something that has $1 million. I'd be like, no, go back in history. They wrote that. They're now buying that back. And so just being able to kind of talk about and tie stuff together. For example, we had like FTNT had a larger dark pool print on Friday, and I went back into the historical. They've already been writing with significant size. They came in February, they were writing larger puts out to Jan, and they're still in that position. So there's this way to take all of this, and this chart looks great.
I love it. It's one of my long holdings.
Yeah.
Fortunate.
Yeah. So I mean, you're able to take all of this stuff, and I do love to be able to kind of put all that together. But I mean, it didn't start like this. I mean, it's a process, and it's something I've been diligent about. And after you've sat and you said, like, this is going to be my thing, you grow from there. You know, you should grow from there, so.
You really grow, and you share all this wonderful information on Twitter. I'm so grateful for that. I know you're whenever you do your tweets, I'm like always watching, and it's really great. So thank you. So let's talk about your trading style. So you're an options trader as well. Do you do day trading? Do you mix it up with some swing trading? And what's your style with options? Are you a spread trader? Do you do a lot of writing?
So I'm mixed as far as trading style. Most of the stuff that I do tends to be a day or a shorter swing, but I'm opening that up a little bit more. I mean, it really has been a challenging market to swing in. And so I think you really did have to kind of, if you had that green, you had to take it, because who knew what the next day was going to bring, let alone like trying to think out like a week out, 2 weeks out on something that you wanted to hold with some time. But I am starting to see where there's some positioning in some select sectors, individual names that it just meets everything. The seasonality's there, there's been dark pool activity, there's been options flow, there's been writing. The chart looks great. And so those I am getting and buying more time. I'm smaller size there because there's not like a full comfort level. We're not trending by any means, you know, so the position sizing is going to help. So mainly during the day, I'm either day trading or like holding one overnight. And I'm purely directional, that is an area. While I am like really good at having a pulse on flow and as stuff is coming in and how to like interpret and read that information, I personally haven't myself had experience with spread. So that's like my next chapter, is now to kind of breach over into that. So I'll be crutching off of several people just to be able to kind of acclimate and become a little more familiar. So primarily just right now directional. And I'm starting to do more with shares too, and pick up shares because there's stuff that I want to have for a while and position build around.
Awesome. I have to say I'm a swing trader. Not much. I don't usually day trade, but my swing trades have gotten much shorter in this market. I usually like to hold a little longer, maybe a few weeks to months, but they seem to have shortened quite a bit, either hitting stop losses or, just taking the profits when we see them. That whole axiom of let winners run really hasn't worked too well. It's just like buying the dip. But thanks to Brian Shannon, I'm more of a buy the strength after the dip. So being that you are options flow and, options trading involves a lot of technicals. You must be a technical trader. And I'd like to ask what your favorite indicators, simplicity is key. We want to minimize noise, like we said. So I'm sure you don't have every indicator out there. What are your favorite indicators for your technical analysis?
Price and volume. I did try to go as pure as possible, price and volume, and minimal indicators. I keep the momentum 821 and then the 50, 100, and I'm using that more, on my daily, setups. And then intraday, I have been adding a lot more of the anchor volume VWAP. It's crazy how it'll come into play. That's usually more what I'm looking for from a daily perspective. But I know last time I had talked to Brian, he was like, put that on intraday. And so I've been kind of starting to add that at different pivot points because that has been pretty helpful. But outside of that, I'll maybe occasionally check, PPO. I prefer the PPO over MACD. You can tend to tell trends on how that stock individually is and how, it can get pulled. But that's really more of my weekend work. That's not on my intraday charts. That's more of like, let me run through some names in some sectors. Do I find divergences? And I do try to keep it just really simple. I went there and it was noisy. So I try to keep it as clean as possible.
Absolutely. I agree with you with price, volume, and time. Anchored VWAP has now become my favorite indicator. And I like to anchor it, year to date is very important, but also the highest price and the price lows, and volume as well, or fundamental events. It's excellent indicator because like you, price and volume is most important to me. It's about supply and demand. It's always about the buyers and sellers. And at the end of the day, we follow price. So, and that's key. So I think we can go right into options flow. If you could tell us, for all the listeners, what exactly is options flow and its significance?
So options flow is going to be all the contracts that have taken place and transacted on the options exchange. And with that being said, we do filter it down to where we're seeing a set number, of contracts. Taking it a step back to just kind of give a lay of the land, options used to just be quarterly, and then it opened up to where it was monthly. Then we have weekly, and now we have 0-day. Options are starting to be so heavily traded, even from a retail standpoint. I mean, I've spoken to some people, when you started with shares. If you had a small account, you just mainly, that's why I think everybody starts with pennies. I think that's the only way to, kind of work that. And I'm finding like there's some people that have been trading that are newer that have never even traded common shares. They've just jumped straight into options, which is a little baffling. So it just goes to show you how popular and how often and how heavily it's the dynamics change to where you kind of have to be paying attention to some of the stuff over here, because this is where you do have positioning not only from institutions, also of course you'll have some stuff that's smaller, not really relevant. So it can be very noisy. I'm not going to take that away from the struggle of trying to navigate through so much information, but there are things to look for, and there's going to be a few things and tips and tricks I'd love to be able to share to kind of just make sure you're honing in just a little bit more so that you're kind of weeding out some of that noise. But that's still just something I think you can't ignore the options market because of it now being a vehicle just to trade, even from an institutional standpoint. When you've got somebody coming in with 1.5 million into Tesla into weeklies, that's not a retail trader. And if they're closing that out the next day, like they're essentially short dating, swing dating. It's not all long-term positional. There's a lot of houses that are even 0 day with size, and that's not the retail driving that a lot of this is coming about because it's from an institutional level where a lot of this is even the heavier hand. So it's something I think you kind of at least have to have awareness for. And it doesn't mean that you even have to trade options. I think even from a common share perspective, and that's what a lot of people do, they want to at least know what's coming in. And is there a theme building? That's one of the ways I love to use it the most, is are we starting to see a theme? So, are you starting to see after like radio sound, are we seeing all the tech names starting to come in and actually more with size? And then you can start to see little shifts here and there. So I've got a few examples I can share as we progress, but it's just at this point, it's too hard to ignore the options market. You at least have to have a little bit of a familiarity.
What you said was key, that it's not just for options traders. It's for everyone. It's for people who just trade shares or who just invest. It's important to know where the money's flowing and how it's flowing. And as retail investors, we always follow the institutions. They're the ones that move the market. We don't move the market. We're like the little fish that follows the big fish or the big whales. So it's very important to have our finger on that pulse and to know what's really going on with the flow. So let's go to dark pools. That's different. That involves shares, I believe, right?
Correct.
Could you tell us about the dark pool?
Yep. So you're correct. It's going to be common shares and it's transactions that occur on a private exchange. The biggest difference, just this simple, the lit market has an open order book, the level 2. So where we can see where there's resting orders already positioned in the book. And that's that larger stuff. You've heard people say that, oh, there's a wall at 150. It's because they could see large share positioning already resting on the book. A dark pool exchange just doesn't have that. They're behind the curtain, larger orders. They're trying to find buyers, sellers. However, all volume must be recorded, whether it's a transaction occurring on a lit exchange or a dark exchange, it all must go to the consolidated tape. The time and sales is going to be like an accounting record for the underlying. So should something ever come into question, of course, with order processing, there's a lot more that we don't see on the back end. But if anything were ever come up, you could tie it back to a house, know who placed the order, and you've got everything that you need. So the biggest thing, it's not that they're transacting and it doesn't ever come to light. It does, because all volume must be recorded. So there's not transactions that they're like okie dokie retail over here and doing stuff that we don't ever ultimately get to see. And the reason they do that is to conceal their intent. I mean, they coming in, if you had, like $1.2 million order on Tesla, if they were trying to get that filled and they were trying to, come in on the lit market, they would never be able to get that price. It would upset the current auction process. So they are still very highly regulated. Is there shady stuff? I'm sure there is. I'm not going to say that there isn't, but I just kind of want to debunk and simplify a little bit more, just from a basic understanding. And really in a nutshell, that is all there is to it. The most frustrating thing, you don't know the intent. You don't know if that's a buy or a sell. And that's the reason that they're facilitating on a private exchange. And I understand the frustration. I get that. And then most people go like, well, why would you even follow it? Well, what you miss is when you can't take and actually see all the information together to be able to identify those trends, to be able to see things coming into leveraged ETFs, random sector ETFs. Like before we started to move, and this was January, we had Bug, and most people don't even know this ETF. Bug is cybersecurity.
Yeah.
So you had a 2.6 million share dark pool print. And that's so thinly traded. And it's not that I want to trade Bug, but I want to go, what holdings are in that? Because I know I'm going to get a lot more leverage. This is interesting. Like you do not, it was the largest that have been using Blackbox, I think, for 5 years now, the largest that you've ever seen. It's just very, very unusual, very rare. Right after that, we had Sky, SKYY. So within, 4 days of each other, you've got cybersecurity, and then you've got software. And it's like, wow, this has been an area that's been really beat up. I'm going to start looking at these charts. I'm going to start watching options flow coming into these. And it's a way that I take and I marry all the information together. So it was like, okay, is this going to be is this where an institution is coming in and where we may be able to start carving out a bottom? We are in a very impatient world. So I know people want it to happen and they want it to happen like right then. Well, this doesn't work. Oh, that was a sell. That was a buy. That was a sell. That was a buy. I try to tell people, don't do that to yourself, because you're really going to make it difficult to kind of see the bigger picture. It really is the takeaway in the biggest facet is to be able to say, what grouping, what sectors, and then you've got some levels to work off of as far as areas of support and resistance, because ultimately you're going to go to your chart, and somebody who's scalping that may see an opportunity completely different to me going, wow, this is hitting 52 weeks lows. We've already been basing. Those EMAs are starting to tighten up. It's been really dull and quiet. If I was an institution, this is probably where I'd be coming in. And now I'm taking, and no, I don't know if that's a buy or sell, but I could also start pairing that with the options flow, which is a little easier to be able to read direction. They're either going to be in calls, upside, puts, downside, or they're writing calls, downside, writing puts, upside. So there's some very, that's how I love to do it. I don't like to use them independently. I like to be able to merge that together. And I will tell you, it is something, I mean, this is just, I know a lot of people, are in charts all day, and I can still see my charts, don't get me wrong, but like, as far as really being immersified with the data, that's stuff that I've been able to pick up. And that's really, I think, where I've really been able to be a solid resource, because it is something I'm looking at all day. And like you said, Rosanna, for you that's trying to manage a whole bunch of different things, different stuff, when you look at that feed and all like the stuff coming in so fast, it's overwhelming, and it's like hands off, never mind. But that's really what I'm doing, and going through all this information and trying to find the best of the best to kind of like share that out there, with others that could possibly have the same opportunity to assess it and see if there's trade opportunities there for, everyone. I want everyone to, succeed. And I offer a very small little part on just giving a little insight into some of what the money flow is behind some of these moves.
Love it. You said quite a few things that I want to point out. First of all, you're very analytical. We know that. Okay. And you're great with pattern matching, but you have the attitude. That's what I love. It's that humbleness that, you're always learning. You're skeptical, you question, and it's like, you just know that it's not that you're always right. There's no absolutes. You're always there as a student and learning. However, you are an expert. And that's part of being an expert, is knowing that you're always learning. And it's that attitude that you have. And I love how you said how it's just, you can't just look at one in the bubble. It's not just one part. These are all moving parts, and they're constantly moving. And you have to look at all the data across everything. And then you put it all together and you see how it fits together. And then when you do that, when it's so different than when it was just standing alone, because everything's relative to each other. It's not just exists on its own. And just knowing that is key. So you take the data and then you have the right attitude on how to read it. I love that. And, I love how you say about how they are concealing, these institutions are concealing their intent. And that's very important concept to know that. There's a lot we don't know about. But in the great book by Brian Shannon, that Maximizing Your Gains with Anchored VWAP, he mentions the parent and child orders, how a lot of these huge institutions chop up their orders in smaller orders, and they base it around the anchored VWAP, and they want to sell, right around there, right just a little above. They want to try to go they establish a fair value, but they do that chopping up of their orders to conceal their intent. So this is a common theme. And when I see the common theme across different areas, to me, it's more of a truth, like it makes sense. And that's how I look. I have a puzzle that I look at all these different parts as well. So now let's talk about phantom print. What a cool name. I love that. Tell us about phantom print and its significance.
So through seeing all of the dark pool activity, so our feed is set to show, it's not set to just show like large orders. So we don't show any of the lit orders, like your market on close, market on open. And with that, we have the feed set up to see at least 100,000 shares on any entity or a set notional amount. So we'll be able to see the activity that comes through, and it's mainly came about with SPY and seeing orders that are outside of the price range. And so like it became a challenge to try to explain it to people. And I know other people have seen this too. We just kind of said like, we've got to kind of have a talking point here. And so we said a phantom print. And what we did was it's a price that's still being recorded to the time and sales on from a dark pool exchange. So whether that's a buy or a sell, how they're able to do this, I tried. There's not a 1-800 dark pool helpline. So it's just through observation and kind of stuff that we've monitored and we've seen before, where you have orders coming in that are either way above, way below, and we've seen where they've become magnets to price. And the biggest one, and this is really where we started to watch it, was before, gosh, it was 2 years ago now, 2.5 years ago, almost 3. We were not even trading at the 400 level, hadn't even been breached on the SPY. I think we're still just in this range, chopping 385, 386, 390, somewhere like that. And we had a 1.2 million share dark pool print at 403.91. And it was like, how can they do that? And I was like, well, let's wait and see if they canceled. That should be your first thing. You don't want to just like overly assume. People make mistakes and they're fat finger orders. You want to think that first. And so you want to be able to see if that order cancels. And it never canceled. And I watched that tape all night because I was like, whoa, we've never even traded here. And we had seen some little ones here and there, but this was really the bigger one because it was a level we had never traded at. SPY had even never been there yet. And then I think it was probably about week and a half later, we gap up and we go right to that level. Wow. I mean, it was a gap and just stop, right? Because I told her, put it on your charts. Yeah. So before we actually did start to move, we did see some, and of course there's not a timeline that's going to tell you when that's going to come through and hit. It's not options. It's not telling you, you know, up, down. It's giving you some pricing levels. And there's some nuances. I don't want to go too far in the weeds. It's kind of something I've talked about, but and through observations, I've kind of scaled it in on what I really focus on around phantom prints. But before that 400, that 403.91 level got hit, right before that, you had just this rapid fire of orders that were out of the money into a very odd expiration. It was going into like a Tuesday or back then it would have had to been a Wednesday expiration. They came in on like a Friday or something. And I mean, you're talking 5 points out of the money, and they hit it with almost, 3 or 4 million. It was so unusual to see that kind of size for something that was, I think at that point it was like $8 out of the money, and you didn't have a lot of time. And so it was just, again, something that you're able to take, okay, we know we've got this here, and you're going right at that same level and seeing it in options flow. So it was kind of like, okay, it's go time, and that's the way of kind of using those together. But there's a lot more that kind of goes behind that, and mainly because we knew that there were orders that were in smaller lots. Our feed is set to show 100,000. So we didn't really know like how much more would be coming in if we open that feed up. And we did. And now you get a lot more come through, which makes it a little bit harder to kind of weed through. What I do tell people is if you do see phantom print, pay attention to the ones that are close to pricing range. Don't go and start trading around those that are coming in 20 points up and 20 points down, because I'm noticing some other nuances and there's something else going on there. But I do like to, and I'll usually post if we have one that's like, $1.50, $2 upside or downside, because usually can hit those the same day.
Fascinating stuff. That magnet theory is pretty amazing. How often does that happen when you see, if, let's say they don't cancel, they didn't fat finger it, and it's there? Do you see that number getting hit usually? And if you do, how often is that?
The ones that are really far out of range, I haven't done the tracking. It was overwhelming to keep up with everything, because once we opened that feed up, it became very noisy. And even it was starting to kind of get to where I would go like, oh, well, this is all coming in. It was affecting my bias. And I said, all of these, it seems like we're coming in one low, one high, and we're about 20 points away from each of these. Like, I can't stay focused on that. And they were still ones that would eventually hit. There's still some members that track like every one of them. But I had to scale that back because it was starting to kind of mess with my bias. And so if I focus on anything, I'm only focusing on the ones, like I said, that are, a few dollars away from where we're
Mm-hmm.
currently trading, because those are the ones where we've had the most success. And sometimes that could be same day, just depending on, how far and out of range, or, the next days, a lot of times we're gapping up or gapping down to those levels. But I do try to keep it very narrow, and don't like to go too far and rabbit hole too far out of range. There's something else like that that's tied to, and that's just the part, like, I don't know that, because I'm not on that side of the house, or that side of understanding, when they're processing those orders.
You're like at the front lines of all the
I can
data
see
that's
you, but I don't know
coming in.
why.
You're like at the front line, like where all the action is, and must definitely be overwhelming. I'm surprised your head isn't spinning sometimes with all this information. So, I think it'd be great if we go right into the word unusual. Now, unusual options flow is what we focus on. I think that's what you focus on. You want to see the unusual flow. Now, you mentioned cybersecurity. I've been a bull. I'm going to tell you, I've been a bull on cybersecurity since I don't know how long, because being an e-commerce business, I know the importance of cybersecurity. And I guess from a fundamental point of view, I've just been so bullish on it. I have a basket of them. And so to me, I love hearing that you saw that flow. Could you tell us in more detail what you said? It was unusual because it's usually a thinly traded ETF bug. What did you see? You saw a high volume? Did you see out of the money? Could you just tell us about what you saw with bug? Because it's certainly run since then.
Sure, sure. So the starting point on that, and this is something I've noticed that does happen. This is why I like to have a lot of the information. So think about it this way: most people don't look at dark pool activity, and let's be fair, it's not like you're missing anything. Some people are very stock focused. So if they're also somebody who reads tape, you're going to see those orders come in. So that is being recorded. So nothing's missed there. But it was larger dark pool activity in both the ETF bug and Sky. So it started with shares, and it wasn't anything that was options flow yet. But I just told everybody, I was like, start paying attention to if we start to see individual names coming through. We want to see that positioning, because seeing this, and this is not where they're coming in and dumping. This is going to be, I think, where we have a rotational trade, and those can be massive when you start to see some beginning stuff sprinkle in with that. One of the first names they came in with size, and it has been just a rock star, Pan W. Pan W started to see, Pan W, and again, first started to see dark pool shares of notable size. Pan W is one that doesn't see dark pool often, and especially something that's at least a million plus shares. So we started to see that come in, and that was one of the first names that they started to get pretty aggressive in. And typically what you'll see is what most people miss first, because
How
they
long ago was this, Mel?
in,
What time period was this?
early February.
Well, they had beautiful earnings back to back with great free cash flows.
Yep.
So maybe
Early to mid February is when you really started to see a lot of that. And they actually were going with some time. But what I'll tell you is what you'll see, not always, of course, there's never an always, but what most people miss or they don't realize is that a lot of times what you'll see is they come in and they first start writing puts. So there's this whole other side to the options market where most people are used to trading just directionally. I'm bullish on Tesla, I'm going to go with calls. I'm bearish on Tesla, I'm going to puts. There is this whole other side of a way to be able to make money in options market, and that's through spreads and writing to cut premium. And some people, I was kind of shocked that I have to add that, because people just were not understanding. And then I realized that maybe they didn't even know that this was a whole nother function of how the options market works. So I had to really go back and let's start at square one. So it's still worth noting, because some don't, and that's okay. But what you'll see sometimes is that they'll come in and they'll start writing puts, and you start to really carve out that bottom. If you've got some size, that's a way, because not everybody's looking at put writing. Not even all flow services have put writing for you to even be able to know that they're doing it. So let's start with just square one. But that way they could start collecting that premium before they even start to go alongside call side, because that's what everybody's looking for. If you have, a scanner at a minimum, and you want it to filter down some information because you're like, I don't want to trade weeklies. I want to weed out the noise. If you're going and filtering anything, you're trying to at least look 500,000 plus. You really want to know where the size is, really where the positioning is. So you'll see that. You'll see where they'll come in, puts or a bull risk reversal. They'll write the puts to fund the calls, and then there's bullish, and then there's like bullish. So there's several things to look at, but with PNW, that was the first name they got most aggressive in. What was another one? We talked about FTNT. That's one where they came in around the same time, it was mid-February, and they've got almost 1.8 million puts that they wrote, and they're still in that. So they haven't gotten as aggressive call side with that kind of premium. Again, starting out, the bigger premium has been in put writing. And if they want to come after name, now I will say there's been a little stuff here and there. It's cute, but it's not like, wow, somebody's serious here. So I'm sure we'll have that kind of come through and then we'll start to see some bigger momentum in the name. That's kind of what I'm looking for.
Awesome. Thank you so much. I'm a fan of credit spreads. I like to be a writer myself. So very interesting to see when you start seeing initially some selling of puts, that can be very bullish and depending on where it's sold. Yeah, I love that strategy where you sell a put and it helps fund the other side. If you do, let's say, a debit call spread on the long side, a bull call spread, or I like diagonals, actually. I like doing that a lot, or whatever. But that's interesting that you see that. Do you notice that you tend to see that first, or is it just what happened in this situation?
Just what happened in this situation. You're not going to see it on everyone. You'll see it in the middle of runs or on pullbacks. There's not the timing, but I would say, like, just when you're starting to see those themes starting to emerge, that's some of what you'll start to see before you really get the individual names to really start moving. Because I know that could be frustrating for people because they're like, but this came in and I'm right on my position. I'm like, honey, they're out to 2024. You're going to have to give that a little time and stop managing that on a 1 minute chart by all means. And some people don't have the patience for that, and that's okay. Like that's stuff that you really don't probably need to be positioning because you just know yourself and you're not going to have that patience. And vice versa. There's some people that work during the day. That's all they really want to know, because they need to have stuff that has a little bit more time so that they can kind of ride that and not have to micromanage. So each its own. No right, no wrong.
Absolutely. Well, speaking of each his own, the unusual term, can that be subjective, or are there, it depends on the ticker and what's usual for that ticker and what's unusual for that ticker? Could you tell us about that and what you look for?
Great question. And I think we'll start with square one. I think people assume that if it's coming across an option scanner, that just by that in and of itself nature that it's on there, that it's unusual, and that couldn't be far from the truth. Going back to how heavily names are traded, that's especially in our most liquid names, Tesla, Apple, Microsoft. I mean, you will literally see $500,000 position come in the morning and close by lunch if they've gotten that move. Like, it's just it's being traded.
Fast.
They're options being traded. They're not positions. They're trades, and they're being utilized as trades. And so you have to be very specific, and that is going to vary in so many different ways on how you evaluate an individual ticker. So there's going to be something like Microsoft, Tesla, like there has to be size. There has to be something so unusual with notable size. I don't even watch Tesla flow. I'll spot check it with filters on. I am not getting into the noise of all that comes through on a weekly expiration because it's just too much. Same thing with Apple. What I like about Apple, and an interesting observation, is there's a player, and we're just assuming it's the same person, but he's just called the market every time because he'll come in and we get a little frothy and he'll start writing calls. And it's at 12 million. It's about a 12 million, 12 to 18 million is kind of where but it's always been at least 12 million. And then we'll pull back from there. And then when we get to the bottom, we're always looking for him, closes that, writes the puts. And so he's not doing directionally. So most people wouldn't even know that that's positionally there with that kind of size. And that can carry, a huge impact. So he's kind of just done this thing. And what we've been saying, I was talking to my mentor, Charlie, he's like, we have to have some participation from Apple here. We still haven't seen this player. He came in on Thursday. So he came and wrote puts, and we've kind of been going ever since. So that's just kind of something that is individual, because you start to kind of get a pace, you get a feel for what comes in, what kind of size comes in. And then of course, there are those that are just unusual, that never see options, and they just start just jamming it. Another thing is going to be frequency. Did they just hit it once, or do they want in and they want in? And what will happen is, I'll use the example from the flow that we had from Twitter before Elon announced. So they came in and started, and they paid like, 85 cents. And then they're like, hit it again. And then, I mean, like, it was just like, they couldn't get enough. And each time they started 85, and that pricing kept going up, and they were like, I still want it. I still want it. I still want it. They're sweeping that. That's showing that aggression. And so that was unusual because of the way it came in. It wasn't that Twitter didn't see flow, it just the way and how aggressively they came in shorter dated contracts there.
Wow, as they have the demand exceeds the supply, so the price keeps going up. Interesting. This has to do with pattern recognition and how you watch these patterns. It's just amazing. I find it fascinating. As you're explaining it, I'm like getting so excited. I want to go read some flow right now and see what I see. But like this guy that you mentioned, the market person, this $12 million. I'm just going to have to ask you, if you've watched him now, this person, whoever it is, and they've been making the right calls, and as soon as they come in, you notice that direction, and then they pull out, and then you notice the other direction. Could you technically just follow their trades and just be making money? I mean, is that possible? Could you do something like that?
Yeah, absolutely. So there's several ways to do that. Like I said, this player primarily he's not trading directionally, he's writing. And so I don't personally write, but it doesn't mean that I wouldn't use that information to go long, and just a directional call. Now, Charlie, he actually writes. So anytime he's in there with him, he's writing right along with that player. So it could be that, you see that, and that's shares. But I will just say, what you want to be able to also track, if you're tracking options flow, is the open interest. You want to be able to know if they got in, that they got out, because that can have an impact at that point, because you got to think a market maker is trying to stay neutral along with that position to carry some of this larger size, that if that position closes, then they no longer need those shares, and that can go back on the market and have an effect. So that is important. But yeah, absolutely. I mean, and from there, I think it's important because it's that informational component. The last thing that I would want to do is see somebody come in writing, 12 million worth of puts and try to start shorting. Like, I want to at least know, like, okay, I'm going to have to keep an eye on this technically and make sure I'm respecting my stops. It doesn't mean you have to get out then, trade your plan, but at least some awareness is helpful, just because you want to kind of just make sure if you get stopped out, you're respecting that.
Absolutely. Risk management is number one, always. So absolutely. This $12 million person, is there an index that they're doing this on?
No, it's on Apple.
It's on Apple. Wow.
Well,
that's and usually basically like an index, I guess. Apple is.
Yeah.
So it's like its own index.
We have a PowerPoint on that we did as kind of a training thing. We wanted to show people because we were tracking them. I'll have to pull that out and send that to you, because I think you'll find it interesting.
I would find it absolutely fascinating. You went into the open interest, which is key. It's always about matching that high volume and flow with the next day's open interest. Could you tell us about how you do that, please?
Yeah, great question. And I think this is part of doing your due diligence. I mean, there's, some of the trades I will tell you, like, I take only because you don't see that name, and it's a straight flow play. So I'm like sized accordingly with that risk, but it's something you don't typically see. The chart's not there, but it's just too unusual. Well, I'm only trading off that flow. So I certainly want to know if that changes and they exit. And a way to do that is to be able to monitor open interest. So let's talk about like contracts on each strike and expiration on each line. You're going to have volume. And that volume is everything that's coming through today, is going to be every contract that traded. And something else to think about, if I open 5 contracts and I close 5 contracts, that counts as 10. So some people think that sometimes the closes don't count. And of course, it is just contract. Now, Volume is everything that's coming in today, and that's going to be versus an open interest that only updates once a morning, pre-market. So everything that was traded today, you would want to check and see if it stayed in the book tomorrow, if it stayed in open interest. And it is really important because sometimes with some of the moves that we're making, if they come in the morning, they may be positioned with some really good size, and like, let's just say you get this monster move and you start to see some of that same line going bid, meaning they're closing out. You'd want that confirmation tomorrow that they did actually in fact close those contracts. And it is just as easy at the end of the night, if there's some flow that you're tracking, just write down the volume and open interest the next day, just see if that increased or decreased. So it's something I think is really important, because if you're going to follow them in, my thing is, if you follow them in, you follow them out.
Absolutely. So you think it's safer to, when you see the volume, let's say today, to verify, wait till tomorrow to have confirmation about that swing trade or whatever it may be?
If it is coming in, if it's questionable the way it's coming in. So there's going to be what I call clean flow, that they came in and they paid $1 on the ask. They came in, hit it again. They paid $1.10. They hit it again. All of this ask side, there's nothing to question. So one of the things that I'll mention, and we were talking about this today, it's one thing to just have one line item of flow. You have to take it at face value. But when you have multiple lines of flow coming in on the same strike and same expiration, there's something very specific that I'm looking for. I want it to be the same strike, same expiration, that your contract price every time they're coming in is going up, because that's going to tell you that they're interested and they continue to come in, because by default, your IV is going, that's what your pricing of a contract is made of, the interest. So your IV should also be moving up, because now there's interest in this contract. And so you're going to see where that pricing starts to increase. You're not going to just hit a contract for $2 million 8 times and that stay $1. There's no way. There's no way. So you want to analyze that information. That's something that's really important. And that's oftentimes where I can see that they're opening, closing. That takes a little more time to evaluate, but never buy a contract if you see where they come in and every time it's going down. You may not be seeing other orders. And this is where we've had a huge thing on Twitter, because I was like, that is not opening, that's writing, and that order just got stuck. Everybody wants it to be black and white, and that if it's ask and if it's bid, it is. And it's very great, because as soon as those orders start coming in, as fast as this tape moves, some of those do get stuck on the bid. It's more important to focus on that pricing. Also looking at timestamp. If you have something that came in at 10 o'clock for 1 million and they paid $1, and then the second order came in 5 seconds later and it's at the bid and it moved to 10:10, that trips people up, because they only see ask and then bid. That somebody did not come in and put $1 million to turn around and close it 10 seconds later. It's a function of that order getting stuck in the tape. And most people don't realize that. That's a whole different one.
Love this. You're like I award you the PhD in option flow. I mean, this is amazing. This is a whole science in itself. This is absolutely fascinating. And your depth of knowledge is very impressive. You called out the other day, the QQQ. I think it was, let me have it written down here. The calls at 307, expiring 323, was a $5 million order of flow. And then you verified, I think you had news for us today. What did you see with the open interest?
I did. And so let's kind of just talk about a little bit on why this really was so unusual.
Yes, please tell us.
First off, let's talk about where you'd expect to see positioning, right? So we know that SPY and Qs are going to be primarily used to, hedge. You're going to have rolls. You've got people that have larger books that are going to constantly be taking off. If they had some puts, they're going to make sure that they always carry that. And that's always going to be something that adds, to some protection. Most oftentimes you're going to see that larger positioning in your third Friday, which is your monthly OPEX. So it is a little bit different when you start to see, multi-million and some size come in to something that's not your normal expiration. So that's kind of always something that's like, ooh, why that day? Even more interesting is that we have FOMC this week, and on Monday they came in for contracts that trade this week on Thursday with $5.31 million. That is a lot with not a lot of time. They came in positioning. I think they were right at the money or a little out of the money into the 307s. And then here we have a gap up this morning. So far, of course, I have to double check. So far, they are still in that. I checked that this morning. Now, when I did check open interest this morning, of course, I wrote down the volume yesterday was about 23,000 total. This player's contract count was about 17,000. So it does look like there was some profit taking, but OI did increase this morning. We now have 14.1 thousand still on the book. So that's fine. They had a hell of a move yesterday. I mean, I would have been surprised to have it all come off because you really already had a really good like 40% pricing on that. So it's interesting because with FOMC coming up this week, like that's really kind of putting yourself out there. And it really just seems to be around this event. And I don't want anybody to think that like, that's what I think exactly is going to happen because they can close at any time. And so if you're not monitoring that, like, I don't want people just to carry and carry additional risk on just because of that. But that's why you want to have that. You want to be able to go because that could have easily just been traded yesterday to where we did see that line come in, but they had that profit. And remember, indice ETFs trade 15 minutes after the close. They could have closed that yesterday, 10 minutes after the close, and most people wouldn't even know that they could do that or even looking for that. So I just want to kind of add a little caution there that, you know, it is worth making sure you are checking that open interest, especially on very liquid names that have so many expirations like the SPY and the Qs.
Absolutely. Wow. Thank you so much for sharing that. Now, the unusual, and I just want, like you just said, off weeks, the non-monthly, when you see large amounts of money, high volume on off weeks, that's significant to you?
Absolutely. Absolutely. Because where you usually have the positioning is either on the Friday or it is. But it's a sizing component when you talk about the major ETFs. You know, it's not that like there's 100, they hit that twice, 75,000, and they're trying to go 20 points out of the money. That's just, they YOLO a little different than we, than we do. And it's about the size. It has to be about the size. It's just too liquid to not be about this size. So you want to have, if you're looking at that stuff, there really has to be several million for me to even really go like, okay, that's interesting. But you know, there is a lot of 0 day. And so to see somebody come in now on, you know, SPY and there's 3 hours left in the market and they come with 600,000, like that's what, you know, there's like now only a few hours, not even,
I know.
you know, it really does have a huge impact. So something to keep in the back of your mind.
Absolutely. Mel, there's a huge rise in these 0 DTEs. What type of effect are you seeing on the flow and effect on the market overall? What are your thoughts on these 0 DTEs?
Yeah, you can definitely see it. One thing I think sometimes what you don't see as often with size, they seem to flip-flop. I was talking to somebody about this yesterday. So yesterday we had so much come in, shorter dated into SPY, Q, IWM, and we weren't as active on the SPX front. We also have SPX flows that come in that will show, you know, your 0 day as well as your weeklies. And that you're seeing a lot more of that, like with the size, that's just incredible. It can get murky. It really can. There's writing, there's opening, closing. What I really look for is that there's a consistency with coming into same strike and expiration. Like if they're, you know, 20,000 or, you know, 200,000 into one, and then they're coming into puts and they're coming into calls and they're coming into puts. I just like, I'm technically trading that. It's not valuable. It's noise. But then there's sometimes like after one of the FOMCs, they put in for a 0 day in SPX, like 1.1 million. Like there was like 2 hours left to go. And then they hit it like 8 more times. I'm like, well, here we go. I mean, that's kind of like, oh,
Do you jump into those trades when you see that?
I don't trade too much SPX. I prefer to just stick with SPY. I mean, SPX is a beast in of itself. I mean, those contracts move just so quick. But I'll use that to trade around SPY. So it doesn't, I mean, you can use and flip flop. Just because you see one could give you the sentiment read for some of the, you know, other index you're most comfortable with. So I think you really have to be comfortable sizing up at that level because that could really kill a cow quick.
Oh, yeah.
I
I
just, my
like
heart
that.
gets to racing. I can't do
Yeah, I'm sure. I love
I'm
that.
no good if I'm stressed.
No, and I don't think many of us are. I love that, kill a cow quick. That's a cute, I like that expression. So tell us, what is a Mel's favorite? What would be your ideal, very telling options flow direction and signal? What's something you like to see that's very
I
convincing to
like
you?
I like knowing that I like knowing that we've had some dark pool activity because I feel like there's already been an institutional presence there. And I've gotten to where I'm liking the put buying, seeing that first, because I think you
Mm-hmm.
don't get those call side contracts as juice because you don't have anybody aggressively coming into there. You just gonna have one side of the
Mm-hmm.
trade. So ideally I like to know that there's been some positioning dark pool wise. Then you've got the put writing. I like to be able to get into those calls with a little time before we actually see like the call flow come in, because I feel like I get some really nice pricing there.
So you're getting like the pictures getting painted for you. You're
Mhm.
having the background set up. So it's like establishing some type of direction before you see any major action going on.
Mhm.
Very interesting. Now you talked about how you don't really watch the Tesla flow as much. There's probably, I mean, when I look at the flow, Tesla, Apple, Nvidia, all these big mega caps. There's a lot of noise, and there's just both directions, and you're seeing calls and puts and this and that. How do you filter out the noise, or do you just say, I'm not going to look at that and I'm not going to really focus? How do you work through all that with these large companies?
I use Blackbox for all my data. So they actually have a filter where you can click omit. So you can
Hmm.
put tickers that you want to completely omit so that you're cleaning up the flow. I know some people do that with like Bed Bath and Beyond. Like they never want
Yeah,
to see
or
that.
AMC
Doesn't
or something like
matter.
that. Yeah.
Yeah. And then there's a way you can filter to where you only see. I don't like that one. I'd rather just omit. Now, that doesn't mean that I don't go through and spot check, but as far as slowing down the feed to where I could have it to
Mm-hmm.
where I could actually manage, like I'm not super, but I can't see things if I can't see things. And it gets really, really noisy. You're absolutely correct. So I omit them and I'll go back and I'll spot check them and try to see like what we have that's running in that's like 1 million and over, and check stuff from that point of view. But I don't want to see every weekly contract that comes in on
Oh,
Apple
I'm
or
sure.
Tesla.
Absolutely not. Now, with traders, they always keep an eye on the overall indexes, when then they focus on the sectors, and then they look at their individual stocks. With the flow, do you do something similar? Do you always keep your eyes on the QQQ and SPY, and then you look at like the sectors, the spiders, all those various sectors, and then the stocks, or do you just read the flow as it comes in while omitting certain tickers?
I think I've seen the biggest improvement, and just really having such a better grasp because I organized myself very well with the information because we do have filters. So I keep one tab that is only equities. I keep
Mm,
one tab that is ETF excluding SPY, Q,
mm,
and IWM. I want that out so I don't miss things. And the biggest things I don't want to miss is leveraged
mm.
ETFs. And then I have another tab that has only SPY, Q, IWM. So I'm keeping it to where I go through these 3 tabs, but it's keeping it
Love
very
it.
organized and I can actually
Mhm.
handle the amount of information. If I went back to having just the feed completely open, I we wouldn't be having this conversation
I
today.
love that.
And why that's important is because those leveraged funds, most people don't realize like the impact when you talk about some of this. Let's talk about SOXL.
Mhm.
Not last Friday, but the Friday before in deep red tape. I mean, that was right after there was hawkish commentary. It was like sell everything. In deep red tape, somebody came into weeklies for SOXL, which is 3 times semi long bull ETF, and that's 3 times leverage. And
Mm.
they came with some change, and they came with 2.5 million for something that had 1 week to work out. What I kept telling everybody is watch the semis because you're not going to come and put that kind of size in and they stayed in through, I think Monday was red, it was red tape, and I kept going back and looking, they're still in. And so from there, SOXL is very liquid. It does move, but I know I'm not going to get the same leverage that I could if I were to trade in an AMD or an NVIDIA. So that's how I use that information to go set up trade
Mhm.
idea. Not necessarily, we didn't necessarily have flow that I thought was like over the top in any of those names. Of course, it did start to roll in after you kind of started to have some move, but you know, I like to know that's there because I think that's when you can start to see sector rotation. And that was one of the huge trades that I caught this year. And I really, Joe and I did a spaces early on this year. I actually was like, hey, can we do a spaces? I really want to tell everybody about this oil and gas trade.
Mm.
They started coming in with size into the ETFs, never touched the individual names. The individual names are
Mm.
gorgeous. How do you short strength? I mean, they were still like, we're talking the beginning of the year before we've had some of this rotation. But they were positioning it in all of the ETFs out to June with size. So they hit OIH with like 19 million and they were red on the trade, but they never left that trade. They used every opportunity when there was a gap up and they were positioning in OIH, XOP, and XLE. And
Mhm.
I remember telling Joe and I told people like, just be like, that's a patience trait. Like if that's not your personality, don't take that because they have not come into the individual names. The moment they start hitting the individual names, that trade will start to work and it'll probably happen fast. But you already know it's there. Just pick your opportunities with, kind of what you're looking for. And it really did. And that moved very quickly, but knowing that you have so much size already positioning, that's one I'm not looking to go long on to swing, right? Like I'm looking more with where I can trade around that. But it also shows you like that was significant size, probably some of the largest I've ever seen in a sector. Rotation. That was the golden child of 2023, healthcare, all that stuff that was, like outperformers. Of course, you take some profit off the table and we'd start to see
Mhm.
some rotation. And so that's kind of where I thought I had an early heads up. And of course, recent price action that definitely is working out.
Absolutely. Beautiful analysis by looking at those sectors and seeing that flow, and it set up what was going to happen. It's almost like you could see what was coming.
Mhm.
And I love how you organize the flow, and it makes sense to me. And that's why I asked that question was, it would be very challenging to have, individual stocks in the same filter as you have the sectors. I mean, you have to compare, it's like comparing apples to oranges. So you have to sort of keep them all separate. I love how you do that. And that's a great thinking. Now, looking at the flow and how you have everything set up this week, what are you seeing, Mel, on what's going on right now? Could you tell us your thoughts on, do you see anything with sector rotation right now going into the FOMC and in the next month or so?
So talking about, not only what you see, some of it is what you don't see. And I'll
Yes.
tell you very, very active yesterday. So we have a system where it'll push through alerts if it meets a certain criteria. And a lot of that is based off of money or how it's coming in. So there's kind of like that buffer to help with that. And I'll tell you, it just slowed down today. And we're like, see, that's the market telling you something, because even ahead of, as we get this close to FOMC, you don't even have big money putting big money to work. They're waiting for this. And it's very
Mm.
obvious outside of a few little here's and there's, small select names. But when I run my filters, show me a million plus, like it's so small compared to what we had yesterday. So I think once you start to get closer, you do start to see more of that choppier price action. But a lot of times that's feedback for me when I can go through and I see very little and I've got something like this big for a million plus, then that's like really hands off, because they're not putting money to work. And if they're not putting money to work, then why am I? Like you
Hmm.
just have to wait. So you really do tend to see like a little slow it down. Um, Tech, there's some good looking charts out there. I mean, in the midst of all that we've had and had to go through, when you look at some of these individual names, uh, they look good. I think tech's made a really good run. I think it's a little overextended. Some of these names need to pull back in, but there's other opportunities in those individual names. I'm still really, really really liking the software space, not really seeing anything too much. I think after the FOMC, that's going to be different. You do really see where it does make an impact, even from an institutional standpoint, where they want to hear that information kind of get, you'll see a completely different story after that. It'll really start to loosen up and you'll start to see some of that bigger size. So I think right now there's a little shorter dated here's and there's. I'm not really seeing anything that's going to kind of hint that we're going to really see outside of, the first half, second half. There's not anything that's as just concrete as what like we had with the OIH trade. I wish there was, and maybe we see that once things start to loosen up a little bit after the FOMC, up or down. It's I don't want to make it seem like there's not, there's just call activity that comes in. Absolutely not. It was a completely different environment a few months ago where you did, and that's what's changed for me personally, is because the last quarter of 2021, sorry, 2022, you didn't have money being put to work. You didn't have, like, if they came in, they were taking the trade off 2 days later. Like, even though they went out to June, you're like, oh, finally we're starting to see some signs where people kind of want to put some money to work. Nope, they were out. You just didn't see them stick around. So it was different because you had to navigate through a lot more, especially for me. Like, I'm more flow trading. I'm looking for, like that position that's really going to carry. It was a lot of shorter dated, very fast, not a lot of time positioning. And then that's kind of where I have seen a little bit shift, in the sense that we're starting to see not like I would hope, not like coming out of COVID when they just like took a bazooka after everything and just, went and bought leaps on everything. Like maybe I'm wishing I'm seeing that. I'm not. So I want to be like completely fair with that. So I don't know. I think we'll see after. I think there's a lot hinging. I know that's every meeting at this point. We're so data dependent. But I think this is kind of a bigger, where do we go from here? I think we know what we need to do, but are they, who knows?
Who knows? Yeah. So there's a lot of uncertainty. I mean, I think uncertainty is the only certainty these days. And so I guess they're not really putting their money to work right now, because they're just probably waiting to see what Mr. Powell has to say. And then we'll have more clear, hopefully we'll have some direction, or maybe we'll stay choppy. A lot of people are saying that it's a sideways market ongoing the rest of this year, and maybe even into next. We'll have to see. And like you said, we always follow price. And that's exactly what you're doing with the flow. You're following the price. The price keeps going up. You know that there's an urgency and they're buying, and the demand is there. So we follow that. And if you see the price is going down, like you said, you need to be more cautious there. So yeah, price is everything. It's the evidence we need. Now, how do you match a rollout? You've talked about how you're able to say, oh, this was rolled out versus, they took profits here. Like, how do you know their intent? How do you figure that out?
Okay. So when they come into a position or open a position, we're going to see that in the flow. And if they exit a position, because we have all the data, we have the bid side data, we can also see when they close. And so essentially, if I am able to tell a rollout, it's because I'm already seeing maybe a shorter dated contract going bid at the same time that they're adding on where they still want exposure. So pretty much what you'll see normally is it's for more time. They may go up and out, roll up and out. So meaning they're taking profits, they're putting part of those profits into a roll. They want to go out another month, and they may even roll up to where it's trading at $80. That would be in the money, but they're going to roll out to the 85s. So then they're taking it and adding more time and positioning a little further out of the money. So they still want exposure, but I think I love seeing that, because it's like, okay, I'm locking some in, and still that's like really those things that you can learn from even just watching some of that stuff. Like, that's the stuff you're supposed to do. Take your profit, get that green. If you still want exposure, take some of that and roll it out. And it's a good way to be able to see that there's still interest in the name. And it wasn't just, like, okay, well, I'm done. It was just a yard, I'm done. Usually you'll see that rolling.
Yeah.
It's
so
typically, if it's a roll,
yeah.
it's something that you're seeing price action that's closing something, and at the same time they're opening. I wouldn't call it a roll if they exited a trade yesterday and then came into one today, because it's not really attached, nor could you really assume that's the same player. It's more with like looking at the timing and seeing that trend where it's a close and roll.
Got it. Perfect. And I guess that signals that there's a continuation in that name, that they're seeing that direction continuing. That gives reassurance as well. Awesome stuff. Now, I'd like to talk about this triple ETFs. You touched upon it with the semiconductors. So when you see activity in a 3X, whether it's the bearish or the bullish, or even in the indexes like the SQQQQ, what special significance do you give to that option flow in those triple? Is it for it to be unusual? Does it not have to be as much because it is a triple? Like, how do you look at that?
It would depend on which triple. And I think, when you talk about SQQQ and TQQQ, they're very liquid. They're very heavily traded. You're going to get flow on that pretty much every day. Maybe not like a Tesla, but you're going to see something positioning there pretty much every day. Then you don't always necessarily see like FAS. Of course, now we're seeing it. FAS 3x financials. Before this occurred, you just never saw it. And every time they'd pop in, it was like, I'd rather see FAS than XLF. And I will tell you that on some of these, it's an easier read than trying to actually make heads or tails of SPY tape, right? Like, so if I can see that we've got, SPXL or SPXU, I would probably lean, depending on the sizing, I'd probably lean on that more than just the individual flow, because sometimes it could be so sloppy. It's just so all over the place because it's just so heavily traded. Sometimes and really, if I'm looking at SPY flow, I'm looking for opening positions, meaning they're exceeding open interest, because I know that's I really don't want to mess with something that's kind of already really heavy with open interest and contracts, because I could have a misread and they could be closing. They could be adding. I'd have to wait till the next day. I do prefer to stick with opening positions, but I find that sometimes with the leverage, you can get a better read. If there was if they came in, I'll check later, but like if somebody came and just put $500,000 or $1 million into SPXL with this week's expiration, I'm going to kind of way off of that a little bit more, because there's just going to be so much more of a move that one can make.
Awesome. Thank you so much for that explanation. And then with the time period, when you mentioned the 2024s, and that requires patience, do you give more importance to a certain time period? Do you give importance to the 0 DTEs? And I'm going to just, for anyone who's listening who may not know, 0 days to expiration. Do you give those the most importance, or is there a sweet spot where like maybe 2 days out or 1 day out or next week is of more significance to you, or does it always depend?
It's just going to be dependent. But I think when you talk about like really, really positioning, you're going to see where there's more time, because they actually want to catch like a few ERs, right? So there's somebody's really interested in seeing the growth potential and the upside potential, that they're going to go out and actually have some time. That's a patience trade. That's going to be more for your swing traders that like want to have that. From a general market perspective right now, I think what we are seeing is shorter dated. So while we're kind of getting, rally bear market, we're not seeing where there's really a lot of interest to go out with a lot of time, like going out to September, July. I'd really want to see that they really want to stay in and commit some money, multi-millions, like not just 200,000. That's not enough for that kind of time. But we aren't seeing that. So while there's been some flow that's been interesting and nice to trade around, keep in mind this is short dated. So that's not really giving us much of a clue, because most institutions they want to be able to go with time if they really see, that growth potential and that growth story there.
Perfect. Thank you. Now, I want to ask you about commodities. Now, gold in particular. We know gold has been, running since I think past week or so. It's been on a tear. Did you see that in the option flow? And were you looking in the commodities? Did you notice it before, or have you been seeing a pattern in gold?
Dark pool wise, yes, the metals and mining. So at the end of the day, I take and download the whole report. It's a lot easier to have that data dumped in Excel. And that's really when you can kind of go, okay, what's the common theme here? And sometimes it's bio. Like the last week, it's been metals, and not only just your larger trades in your IAU, your GDX, your GDXJ, your SLV,
Mhm.
not only not only those, but individual names that are, metals and mining sector. So you did have not only from an ETF perspective, but also some individual names. I don't, yeah, I missed that whole move. I'm not gonna lie.
Mhm.
um, I don't really pay attention and trade that personally. And so I can't really speak to when they really started to position, because you'll see it often. I think what caught me off guard is usually you'll see that positioning ahead of FOMC. You're like, oh, we've got the FOMC gold
Mhm.
sweepers. Like it's just, you'll see them come in
The
Monday,
gold
Tuesday.
sweepers.
Yeah, like they always do that, just in case whatever happens. Well, now whatever did happen. And so now we've got some issues. So yes, they have been coming in, and with some time, I'll have to check on a few of those, because I was surprised to see some of the size. I think they were even out to June, July, some 2024s
Mm.
in SLV. But they, like last Friday, they hit that, and like they were already out of the money when they came in. That thing just moved. And then even on the run up into highs, they came and put on like another 3 million into September. I'm like, wow, you're really putting that on right here. But it's continued to run. So there may be, there may be some legs there.
Mhm.
There were some things I can't particularly speak from the options flow, because I really just kind of gazed over it. I knew that there was some dark pool activity ahead of like that move, but we see that, you see a lot of that. So some that's not, would I say it's unusual? It was nice size, but it can't say like it was just like a bug. It didn't just like
Mhm.
pop out of nowhere. I
Yeah.
mean, you'll see that, like every month you'll kind of see like at least a larger trade in SLV and a larger trade in GDX. So not anything that was really able to kind of go, hey, we got to focus here. So I totally
Mm.
missed that one.
Oh, well, how could you keep track of everything out there? There's just too much. So, what do you, that leads me to my next question, Mel. What do you focus on? What do you have your eyes usually on? What do you like to watch?
I like the unusual names, because I think we're in a name game. I thought it was interesting today in the software space. I'm really focused. So like, I've got a grid of tickers that I'm watching, and I've got Snow, I've got Toast, I got FTNT, I've got ADSK, SE, IoT. And all my stocks are going up. So I'm seeing green, and I had to check myself, because so if somebody's going SPY low a day, and I'm like, oh, see, this is really difficult. It's like all my stuff is green over here, not correlating. And here we've got, some pullbacks in the market. And so I think that's probably going to be the theme this year, is those individual names. And I love to be able to kind of go, what's this? And never heard of it, and start seeing
Mhm.
options flow, and kind of go like, they'll make some really good moves
Absolutely.
off of
I
that.
agree with you. I've been saying that too. A select stock market.
Mhm.
And I think it's been like that for a while. And you've had some run and be very green, while you see others that you would think should run as well, but they don't. And I think fundamentals matter. And I'm a fundamental investor. I mean, I look at everything, of course, you have to, especially in this environment. But I always look at the fundamentals. I love doing that. And like Palo Alto, like you talked about that with cybersecurity, they had beautiful earnings. I mean, back to back. I mean, high cash flows, and that's what you want to see in this type of environment with compressed margins and tightening liquidity. We want cash. We want real assets. We want real. And so, no surprise that that also had a nice run. And then, Snow, I find you mentioned that. I'm long Snow. So it's really been nice as well. But I want to go into not only those commodities of gold, but there is another commodity that you talked heavily about, and you called it SGML. That one, which is lithium, I was invested in that one last year. I always love that one. And they just started having options. I think this past few months ago, they just started, I think like 2 months ago, a month ago or something like that. They started with options. What did you see over there? Because I saw you tweeting about it a lot. What did you
Joe,
see in that?
Joe actually put me on that one, and
Oh.
I had taken like a little trade, but it was one of those names I had never seen. And it seems like that's been happening a lot. So that's when it is individual stock pickers. And I know he was on that one, and I don't recall the exact information that came in. I think it started with put writing, and that's what
Mm.
he tends to like. I mean, he likes to know that there's positioning, but he likes when there's that put writing, so you have some willing buyers or collecting premium, and to be able to see both sides. But that was kind of one I was surprised when he mentioned it, because so many charts looked so beat up, and here you've got this one that just like sticking out, just looks amazing. So there was I'm gonna have to go back and look at that one now that I think about it. I know I traded it and I just day traded. I didn't keep it. And then I saw like he's all over. I'm like, oh wow, that does look a lot better. I should probably try to get back in. I just haven't gotten back in. But those names that are just, when the AI craze started to
Oh
come,
my gosh,
every
yeah.
name, I was going to FinViz, I was like, oh, AI's in the name. That's what it is. Oh, another AI name. There was all these little guys that just popped out of nowhere. I had no idea what they were, and they started to see options flow. So you can catch those trends, and they actually do really ripple down to the rest of the sector if you can find something specific. Yeah, SGML was actually Joe on that one. A few little posts here and there. I didn't write it like I should have.
What's fascinating, what I'm hearing you say is how you can just watch these patterns. There's so much in the market. There's so many opportunities. And I always say that it's like, you can't just say, oh, the market's bad. It's a bear market. It's terrible. There's always a bull market somewhere. There's always some action going on. And it's just amazing how you use the flow to find those patterns and that action. And select stock market, like you said, is the theme here, I think, and I think it probably will continue that way. So what I like to do is go into the mind of an option flow expert, money flow Mel. If you could show us, we have the screen share. If you could walk us through some options flow reading, how you see it and how you interpret it and what it means for that ticker would be great.
Okay, certainly. I have some flow that came in to Microsoft. I'm not sure if I'm set up on screen share.
Tell me if you can click screen share on the bottom.
Oh, now I am.
Awesome.
Sure.
Must have been my fault.
Nope,
I think
nope.
I had to do multiple.
Okay, so I think we're set up here. I wanted to pull up and talk about, I'm going to go to historical because this is kind of some of the stuff that I love to see. And this is going to be Microsoft. So I do utilize Blackbox stocks for all my dark pool activity and options. If I can get myself to work right here, options flow. And we're discussing the filters, and this is something I heavily crutch on. Even when you talk about adding spread, so not only do we have all this stuff that comes with just so many line items.
This is a great interface on Blackbox. I love it.
Yeah, and everything kind of has its purpose as far as color coding, which really helps. And so just to kind of like a quick overview, when we talk about opening positions, yellow means it's exceeding open interest. So that's how I'm able to like really quickly identify it. So like being able to have a visual to kind of help talk through and walk through some of that flow, like so I could use visual, it does really help.
Oh,
but I'm
yes.
go to Microsoft, and this is a multi-leg, it's a spread. And I don't personally trade the spreads, but there's really good insight and information that you can gain here. And I saw, I think I clicked on, wait, let me go back here. I had another tab set up and now I'm on this different one. So I think I skipped through trying to look something else up. So we've got, oh, it's right here. Let me go.
Very cool. Did you set up that yellow to be above or above volume above OI, or was it is this just a standard interface on Blackbox?
This is standard. This is standard.
So cool.
So each line item is going to be a different color to represent how it compares to open interest. So it's a quick way to be able to weed through some information. But one of the things that caught my eye yesterday, this was late at end of the day. It's only showing the date now, but this came in probably about 20 minutes before the close. But some positioning in Microsoft, and Microsoft has had such a run. So I find it intriguing that they're going to come in at these levels and actually position bullish. And this is what's called a bull risk reversal. So they're coming in and they're riding the 421, 270, 250 puts at the bid. And you've got some size here. You've got just shy of 3 million. At the same time, they're coming in and opening the 270, 250 call. So 274 million behind that. So that's, there's bullish, but then there's the extra risk when you look at setting up a position this way, because not only are you want to be right on your call side, but also you've got extra premium that you could take a hit on if this stock doesn't move away from this 270, 250. Essentially, you want those, if you're writing that premium, to go to zero, so you can collect all that. But this coming in at just an interesting spot. I will tell you, Microsoft's been one of the first names, Meta and Microsoft, where we've seen some initial activity starting early February. Those two with the repeats, so those may be our leaders this go around. Haven't seen as much in Apple, which I kind of thought was interesting, and that's one of those things what you would expect to see that you don't see. It seems like the better size and time we do have positioning here in Microsoft, and it's down today. It's not working out today, but this is positioning that has some time that's going to take us.
Yeah, April 21, so you have time.
And I mentioned that this was from yesterday, that the position was yesterday. And this is something that helps me a lot, is the OI tracker. And so here's just kind of a representation. It will carry everything that comes through on this chain. Now, this was an opening position, but you can see here's the volume that we had yesterday. It did confirm an open interest, and it's telling you open interest increased 3,600. So that's a way how I go through and navigate being able to check that a little quicker. And of course, you don't need this. You can write that down and go to the chains each morning. Just keep yourself a list of ones that you want to check on.
Fascinating. I love this interface. Now, what does the red mean?
Red is a canceled order. So not all services will show, like, there's different codings that'll come in. Now, it's not related to this trade. It was a different trade that they came in and canceled. And usually what that means is, like, a lot of the spreads and the multi-legs are pre-negotiated. So they're not usually something that's going to be like that sweeper activity, get me in now. So somebody could have just messed up something and they have to do a cancel before they put the new trade on, just like accounting, like just you can't just go like erase it, you got to be able to make sure it's clean so that there's like a track record and you're able to follow should there any be questioning later. Now, we did add those. I don't, it's there because some services will show that as a live trade and they don't have that it's canceled. So we just kind of want to flag that, like, this is a canceled trade. Like, make sure you're not thinking that this much more came in on that trade. It's actually coming in and canceling that out.
Very nice. On the right side there, are those dark pools?
Yep. So this is the dark pool feed. So this is going to run throughout the day with all of the activity we said. And there's even like a little, you can see this Teva, the system's flagging it. There's an algo that will actually take inventory and kind of build character off of the stock. So it's telling you it's unusual dark pool activity. It's going to be because of one of two things, because this name doesn't see dark pool activity. So it's like saying, hey, look at me. Like, this is not a name. Or
that's
there's
unusual.
something, or there's something of notable size. So it's a way to just kind of draw attention. And especially on those, when we talk about tickers each having their own personality, if Apple had a 500,000 share dark pool print come through, it wouldn't even be anything I'd post mention. It's just not enough. It has to be at least like 3, 4, 5, 6 million for me to really get like giddy on Apple, just too liquid. But now, like, let's talk about like toast. That one doesn't trade that much volume. If that one were to get a 500,000 share dark pool, I'd be like, now I'm really paying attention, because not only does that name not see that activity, it's a little more thinly traded. And even individually, that one does not trade that kind of volume. So for that ticker, that's extremely notable. For something else that's more liquid, that trades more volume, it may not be. But there's a little catch safe in here that kind of like helps you be able to see exactly what we have coming in.
Are there any phantom prints? I love that pink print, a phantom print. Have you seen anything come about?
Not today. Let me check on SPY. We may
like you said, I guess people really aren't doing too much. Oh, I see something pink.
Yep, there is, and it's going to be harder. Actually, we do. It is from this morning. It's 399.19, and we did not get there today. So that would be one that's still open. So again, let me kind of pop this out. So what the system's doing, let me take off these studies so that you can actually see.
Fantastic seeing this live like this.
Okay, so essentially what this is doing and why this was flagged a phantom print is because we're up here right under this 400, this 399.19. And the reason this is a phantom print is because we have not traded at that pricing level today with a look back from yesterday. So there's a print that's like an outlier, and that tends to be where price is.
And that's that what you said, the magnet, right? Like a magnet. So you think, based on your experience in pattern recognition and what you've seen, it should be hit at some point?
Yeah, and because this is closer to pricing range, I mean, that may be something that we hit this week. It's those ones that are like the 15, 20. I prefer to have the focus more on these that are closer to range. I'm actually glad you brought this up because I missed that this morning. I had some other things going on with getting my son out the door. Totally missed that one. So now I'm going to get that added to my chart. And that's all you really want to do. Just add a little level with an alert. Just put some notes, that there's a
so we called it out. Yes, we got the phantom for 399. This is so exciting. Cool. I love this interface, and I want to ask you, could you tell us about the services that Blackbox offers? I know there's some specials you have running right now. Tell us about all these different offerings.
Yeah, so right now we've got $2 for your first month. And it's just a way to kind of get people in the door. We've added a lot of new proprietary studies. We have the net options delta, which is a great way to be able to track the activity that's coming through. This is extremely helpful for your SPY and your Qs. So you can see, we talked about how much flow actually comes in. Well, this is going to be measuring the delta component, and you can see that we're positive here. This blue line is positive. So what started as just an overall taking kind of inventory of everything that was coming through to be able to show the net options delta, which, by the way, Theta Warrior helped to kind of implement this. That's something that he's really brought to light and worked on with our team to be able to bring this out. So not only do we have the net options delta, but we talk about the 0 day and why that is important. Well, you can actually, now that I just added it twice, you could actually take this study and drill it down to where you're just seeing 0 day. So we've just recently added the 0 DTE. So it's going to be a measure completely and only of what is coming in just for today's expiration. So it's a great tool for those that are scalpers that like to be able to just catch those moves a little bit quicker. So there's two options there. We also have the gamma study that was recently added, go, no go. But more importantly, I think one of the biggest unique features about Blackbox is the community. So I know a lot of you guys see a lot of my posts that are coming through, and I'm not able to add too much context. I'm a trader too. I'm trying to do a lot during the day. I'm on voice all through the day, and I'm trading with the team. So it's really helpful to kind of have, first off, just like a good introduction on kind of how to pick out stuff. Why or would we look at this over this? Answer those questions, because I found like most people do just think it's unusual. Just grab whatever you want and it's going to work, and that's far from it. And we want to be able to make sure, I think the biggest thing is just make sure that you do know how to use options flow. And if it's not a service that you stick with us, we still want you to know how to do it, because we're seeing so many people
that's nice.
getting hurt out there. And it's like, that's not what that is. That's a right. What do you do? So even just to learn something, and it's too hard I can't explain what I really want to say, through a tweet, and I'm on, all through the day as this stuff is coming through. So I think it's an opportunity to really be able to come in and at the very least, learn a little. So there is a current promo, $2 for your first month. And then, we'd love to have you join us.
How do we listen to you? Are you on, is it Discord?
I am. I'm actually here in chat. I'm in this BBS start room, and this is where me and a few other moderators, and we're just going through charts, flow, dark pool, everything that's coming in.
And that's included. So they can come listen to you. People who join Blackbox can come and listen to you and learn from you.
Yep.
That's awesome.
All day.
Thank you so much. I mean, you care. That's the difference you're passionate and you genuinely care to help people. And that means so much. And that's very meaningful. Thank you so much for everything, Mel. I just want to point out one thing for people. We had this discussion before. Calls at the ask is bullish. Puts at the bid is bullish. And we need to know, and people who are starting out on options always seem to get confused, and that's okay. It's a learning process. They think calls are always bullish and they think puts are always bearish, and far from it. And like you said, the put writing is a nice sign of, bullish behavior. And I like that as well. And I love cash secured puts for my own self. So it's very important to know that you have to understand how the flow is coming in. And that's what's telling of what this ticker, what direction you're going to be looking at. So very important concept we want everyone to understand. But thank you so much for everything, Mel. I love your charts. I love how much you share. And thank you for spending the time today to share your expertise in phantom prints, dark pool, and unusual option flow with us today.
This has been great. Thanks for having me on, Rosanna.
Absolutely. And I look forward to seeing you on Twitter as you make your amazing call outs. Thank you so much, Mel.
Thank you.
Thank you for listening to the Rose Show podcast. Please visit rosannaprestia.com for more episodes. See you soon.